Today, I want to talk about how the entire world is in the process of banning short selling. South Korea and many other countries already have it banned. India has just been added to the list, and it seems the UK will be the next up to ban short selling. I also want to talk about how Nvidia just caused tens of billions of dollars in losses to those short sellers in the last 2 days. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, CNBC has tweeted saying the SEBI India has just banned naked short selling, saying institutional investors are now barred from day trading and from ladder attacks, and also tightening disclosure rules. So let's hear what the India Business Hour has to say about SEBI, which is the Indian securities regulators, banning naked shorting and barring institutional investors from day trading or from ladder attacking stocks.
Now, moving to the markets, the regulator SEBI has reiterated short selling rules. SEBI has said that naked short selling is banned and that institutional investors are barred from day trading. But the regulator has tightened disclosure rules. Yash is standing by now with the details. Yash, experts that we've been speaking to suggest that it's not a significant departure from the current framework. You've gone over the previous two circulars that SEBI has on short selling. How different is this one?
Is that naked short selling shall not be permitted in the Indian securities market. SEBI also says that all investors are required to mandatorily honor their obligation of delivering the security at the time of the settlement. No institutional investor shall be allowed day trading, or essentially which means to square off their positions on the same day or intraday. As far as the enforcement of this is concerned, SEBI has said the stock exchanges shall frame a uniform provision which takes appropriate action against the brokers for failure to deliver securities.
So we can see from that video there that naked short selling is banned in India. But not only that, institutional investors also have to locate and deliver shares at the time of settlement. And if they don't, the stock exchange themselves can remove these institutional investors from the market. India is just another country added to the list of countries that have already banned naked short selling and are potentially banning short selling altogether. Susan Trimbath also tweeted a screenshot of the Korean stock exchange to see how things are going on now they've banned not only naked shorting, but short selling outright. She's tweeted saying it's like watching rats abandon a sinking ship, only this time the result is the ship righted itself as the ballast went over the side. We can see the short selling ban was implemented early November when the Korean stock exchange was trading for less than 2,300 points. Obviously you had that immediate pop up in the first few days, but again since following that, the Korean stock exchange has been running and has pretty much recuperated all of those losses. The entire Korean stock exchange is up nearly 20% in the last 2 months. This is what happens to not only individual stocks but entire stock exchanges when short selling is appropriately banned. And as I said, and as Kristen has tweeted, it seems the UK Parliament could be next to ban naked shorting and short selling outright. Today we had another brilliant day in the Millionaire Mindset Trading Group with another 100% play on Nexi or Nexamune. You may remember this stock because it ran for us a couple of weeks ago. Nexi also had a great day yesterday, so when the market opened we were keeping an eye on it, and it ran up into the first halt and to the second halt and then pushed higher for the total 100% gains. Van actually purchased in the pre-market at $8.03 per share and sold for a 62% gain. Tony also took out 28% on Nexi as well. S to the P also made another $10,000 today on Nvidia, and Icon's mum even made $475. So guys, be sure to check out the Millionaire Mindset Trading Group testimonials and join the MMTG using the link in the description below. Kristen tweeted saying a UK Parliament member has said that predatory short selling practices are quickly becoming a cause for global concern. Not just a concern in the UK, not just a concern in Korea, not just a concern in the United States, but a global problem. Saying it's crucial that the rules governing short selling are re-examined and strengthened to mitigate potential damage to pensions and protect retail investors. Implementation of transparency mechanisms, daily reporting and much greater investigative powers by regulators to ensure that short selling is conducted ethically and in accordance with the law. Additionally, implementing tougher penalties for market manipulation and unethical short selling practices can deter bad actors from exploiting retail investors for profits. Given the international nature of financial markets, addressing issues related to short selling requires a coordinated global effort. So it seems all these countries worldwide around the entire world are seeing naked shorting for what it is, a giant problem that's happening everywhere in the world, and these hedge funds and market makers have been getting away with it, but no longer. I think this is absolutely brilliant. We're seeing a coordinated global effort to crack down on these manipulative, abusive short sellers. Coordinated global effort worldwide, that seems to be, other than in the United States. As Kristen has also tweeted that 14 billion shares were impacted by Goldman Sachs' manipulation, but yet they paid just a $3 million fine. And on top of that, the SEC or the regulators didn't even name what stocks were targeted by Goldman Sachs. So it seems not only is South Korea, not only is India, not only is the UK standing up to short sellers, it seems pretty much every country around the world is doing so, other than in the United States. She tweeted saying from October 2015 to April 2018, Goldman mismarked around 60 million short sale orders, totaling more than 14 billion shares as long sales. It confuses me as to why United States is the country where these large banks and large market makers like Goldman Sachs and Citadel can get away with their crimes with just measly fines. But yet in other countries around the world, naked short selling is being outright banned, people are being arrested for committing crimes and imprisoned. And to deter it, short selling outright is being banned in many of these countries too. But on the plus side, over the last 2 days, Nvidia has hit new all-time highs, causing absolute destruction to these short sellers. If you haven't already seen, over the last 2 days, Nvidia finally broke out of that $500 resistance, running over $540 per share, causing absolute destruction to these short sellers. And of course, just to slip this one in there, of course the group capitalized, with S to the P taking home $10,600 today with an Nvidia call option. In the Millionaire Mindset Trading Group, I teach you how to take call options like these on Nvidia, and also teach you how to trade those fast-moving stocks with my alerts, my buys, and my sells. But you may say, Tom, why is Nvidia hitting new all-time highs a problem for the short sellers, and why have they just lost tens of billions of dollars in 2 days? Well, you may remember this list from 2023, where the short sellers took the most losses and which stocks they lost the most shorting. Of course, top of that list was Tesla, where short sellers lost $12.2 billion, losing for the entire year nearly $200 billion. And second on that list, you guessed it, was Nvidia. So for every day that Nvidia continues running, these short sellers will indeed be losing billions of dollars every single day. You may say, Tom, just because Nvidia broke those all-time highs, how exactly have these short sellers lost billions? Well, don't forget, over the last 2 days, Nvidia has just ran 10%. And that alone, pushing to new all-time highs, running 10%, will have caused these short sellers dramatic losses. As a result, these banks have been borrowing more and more from the Fed bailout program. Bigham's tweeted saying these banks are now borrowing $10 billion a week from the Bank Term Funding Program, or that bailout program. We can see with the latest update and over the last couple of weeks, the cash drawn from the Bank Term Funding Program at the end of November was $113 billion. Now, at the start of January, $141 billion. So over the last literally 4 weeks, that's an additional $30 billion that's been withdrawn to keep these banks afloat. As the Cabesi letter tweeted, that's because unrealised losses now account for 33% of all bank equity capital in the entire United States. Currently, banks are sitting on nearly $700 billion of unrealised losses, many of this stemming from loans, but also stemming from equities too. Similar to that screenshot I showed you yesterday from B. Riley that had generated new record revenues, but as a result had also generated losses for the year due to unrealised losses on their equity positions. How do institutions like B. Riley have unrealized losses on equity positions when the S&P 500 is setting new all-time highs? Well, it's because they have unrealized losses not on their long positions, but on their short positions. And the Cabesi letter added, saying, to put this into perspective, even at the worst point in 2008, unrealized losses only accounted for 5% of equity capital. That figure today, 33%. Prior to the regional bank crisis, that percentage was around 22%, but since the crisis, we've seen rapidly rising unrealized losses. You can see from this chart, these banks are in big trouble, taking on more and more and more in terms of unrealized losses. And it won't be long until those unrealized losses become realized and these banks end up collapsing. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.